Hey everyone, before we get to the charts, I'd like to invite you to a free marijuana stock webinar this coming Saturday, October 29th at 11 a.m. Eastern. Just click the button on the screen, enter your email, and we will send you an invitation to join us. We will be discussing my 6 years of experience trading the penny stock marijuana sector. We'll be looking at the legitimate investments that are approaching, including an upcoming IPO on the New York Stock Exchange, and I will also analyze any charts that you guys request. I hope you join us. Thanks a lot. Hey everyone, so the tickers we're going to be looking at today, we're going to be looking at penny stock CBIS GRNH CANN, Canadian plays TWMJF OGRMF APHQF, and then the big boy GWPH. Before we get into it, there's a couple of main points that I want to lay down first. Obviously, the run is underway for multiple weeks now, and we have the election coming up. And depending on what the poll results are as we head into the election, a lot of the election results are already going to be baked into the price. So if we have states that are leading and showing that they're going to pass, these polls are accurate enough that the price is going to reflect that. And I remember trading the Colorado and Washington election, and it ran up into the election, and then once it was confirmed that the states passed, there wasn't much of a pop the next day. It was more of a sell the news kind of event. So keep that in mind. If we have polls that are close and it's unsure, we're on the fence which way we're going to go, and then if they are positive results, then we'll see a bullish reaction. But it can be anticipated that we will likely see a sell the news kind of event, as the results are essentially already known before the vote occurs. So that's the first thing we want to keep in mind. The second is that on any pullback, we're going to want to see decreasing volume showing consolidation. Back here, this is just an example, CBIS. We consolidated a little bit, low bear volume on that pullback, and then increasing bull volume on the move to the upside. We also need to factor in, see this big red candlestick, you see increasing bearish volume, but you need to look at the candlestick shape because it is a long lower wick, and a lot of that was bulls buying the dip. So volume is a huge indicator here, and need to, number one, see the amount of dollars trading. In some names I was following this past week, GRNH, it stood out that we were now seeing multiple millions of dollars traded during a day, and that stands out as a bit more than just retail, and we might be seeing some big time money coming in. So volume is very important for consolidation, and it will tell you if we're dumping or if it's normal and healthy consolidation. And the last point I want to make is always have an exit plan. If you don't have a stop loss in place, you need to have a level in your mind that you're saying, if this price is hit, I'm getting out, I'm locking in these profits. The last thing you want to do is get in a position, get in the red, and then figure, oh, I'll just hold it until the next pop. A lot of these stocks you can't go long on because of their debt structure, dilution. I'm going to be talking about all that a bit more in depth in the webinar that's coming up in a week. But you want to have an exit strategy. People are holding from 2014 huge gains, and they didn't sell, and all spring and summer it just pulled back. Spring and summer for these stocks is usually dead, and the bears are all in control, and you do not want to be holding a losing position during that time. So let's get into the specifics now. CBIS daily time frame, huge move. Congrats to the bulls. So we established support, headed to higher highs. Now we're pulling back. We had a big upper wick of profit taking. We had another upper wick, lower high. That was the first lower high on the breakout. It was a bearish reversal inverted hammer with two long upper wicks in a row showing profit taking. We then saw a third lower high in a row, and we broke the higher low pattern. As soon as we broke 0625, that was a lower low. And now we lost the upper Bollinger Band support. When you lose the upper Bollinger Band support, you are no longer in breakout mode, and it is a lot more likely that consolidation is coming. But like I pointed out, the bulls did buy the dip. 0.046 is now key support. If we break that level, we know further consolidation is coming. The 10-day moving average support is catching up. The RSI is cooling off. It was very overbought. We have to be aware of the RSI, but also aware that with powerful volume coming in, the RSI can stay overbought for quite some time. So looking at this day back here where we had 200 million shares traded, and let's say the average price was 6 cents, that is big time millions of dollars coming in for CBIS. Another indication that the top was in besides that lower high was the drop off in volume. That shows that the bulls are tiring and they don't have the momentum. I like to think of the volume as acceleration and a car moving forward here, breaking key resistance levels. And then when the car begins to decelerate, it has a harder time breaking through resistance levels, and now we're leading to a pullback. So 046 key support for CBIS heading into next week, and if we break that level, we'll have to look to the 10-day moving average, which is trying to quickly catch up. The weekly time frame has turned all moving averages into support, and we've turned that 200 week at just over 5 cents into support. So we need to zoom out and find the next previous price history resistance, and that's going back here to December 2014. We topped out at 0.0815, so that's a resistance level to watch, and then we're looking up at the other lower high or higher high back then of 0.0995. So looking back at previous price history is how you can get some resistance levels as well, especially when all moving averages are support. So no doubt about it, significant breakout. You can see the very clear lower high, lower low pattern, and that was broken as soon as we got above 2.5 cents, and that's when the bulls really took over. Now we're looking at GRNH, also very strong here. The difference between CBIS was it went straight up on a huge breakout and didn't really establish much support on the way up. So you can see on that pullback day, Friday, we dropped from 7 cents all the way down to 4.6. So that was a big time pullback. A lot of people were in the red that day pretty significantly. But you look at GRNH and it's stair-stepping on the way up, establishing bases of support every couple of days. And compare the bull to bear volume. Look at the bull volume. 2 days of bear volume decreasing. That's exactly what the bulls want to see. Then some more bull volume. Bear volume doesn't stand out, and even when it does, the lower wick shows a lot of that volume was bulls buying the dip. We're defending the 10-day moving average support very strong. Big time bull volume, continuing to see increasing bull volume at a higher share price. So we had volume here of 16 million when the price was roughly around 7.5 cents. And you compare that to Thursday's 24 million when the price was roughly around 12 cents. Much more significant volume than we started when this run started. So pullback day, gap ups are often for profit taking. That's also what I've noticed. This run is not seeing a ton of gap ups. CBIS saw some gaps. GRNH, not a ton of gaps. But this was an example where gap ups were for profit taking. And we did hold the upper Bollinger Band support, so we are still in breakout mode. That is 13.4. And the low of today is support 13 even. If on Monday we lose the upper Bollinger Band support, close below it, and break 1.3, 13 cents, we're going to look for a further pullback, and support will be down at the $10 psychological level, or I should say the 10-cent psychological level, but this 10-day moving average will be in the upper 10-cent range to be keeping an eye on. So watching the upper Bollinger Band very closely, that's going to give us a lot of indication on what to expect heading into next week. The weekly time frame for GRNH, very bullish, getting over that 200 week as that rejected the price last time. And it's the same type of scenario where you zoom out and you see that we started to form higher lows and higher highs. The breakout for GRNH actually occurred in March and April, rejected from the 100-week moving average resistance multiple times. As soon as that became support, also breaking the lower high of 0.78 cents, 0.078, that was a very bullish indication, and the bulls responded in a big way. So from here, we've got the high of this past week, 15.9, and that correlates up here. 16 cents was the top in December 2014. So that's both CBIS and GRNH with their next resistance level from December 2014. After that, we're looking up at 21.7 and 23 even. CANN, also very healthy. Big scary pullback day here, and the huge volume dump day, big cause for concern. But the bulls did rally and buy that dip. That alone would have me stay away from CANN. After seeing that dump, I would find a play that doesn't have that significant bear volume. But the bulls did recover, get that higher high, and it does now look like normal, healthy, bullish consolidation on fairly low volume, holding the 10-day moving average support of 382. Resistance is the high of 519. If we break the 382 level, we will be looking down at the middle Bollinger Band, which will be right around $3. But we've seen a huge gain. Make sure you're looking back and seeing how much the price has run in the past 6 weeks. So for CANN, we were down here at 77 cents. We've seen a 500+% move already, where we look at the other names, GRNH and CBIS, they have not seen that significant a move. So the move is a lot more developed in CANN than it is in the other two. And we might be seeing I wouldn't be wanting to jump into CANN after it's already seen 500% gains. I'd rather look at a name that hasn't seen those gains yet, is my point. So we are rejecting from the 200-week moving average resistance 2 weeks in a row at 421. but we are riding the upper Bollinger Band support in breakout mode. Let's zoom back out, do the same routine, see where our next resistance levels are. Back here, we've got a resistance level of 565 from February 2015, and then we're looking up at 950, the high of January 2015. And it was very clear here as well in March and April, the break of the lower high pattern, big move, consolidation, form a higher low, and then the higher highs and breakout mode. So that's a couple penny stocks. Now let's get into the Canadian sector, which is a lot more enticing, in my opinion, for investments rather than just trading because of the legal environment in Canada. So TWMJF, after forming a very tight range of consolidation, very clear bull break, and it is establishing support on the way up. And same thing, you can see big high volume Friday, but a lower wick shows a lot of that was bulls buying the dip. So the high of the week was 556. We established support at 480, and you can see on Wednesday we had a big dip and bought that 480 level. Bulls closing up at the high of the day there as well. So 480 is being established as a key support level, and the 10-day moving average is going to be there on Monday, right around that level. So we'll see if the bulls can maintain that. And a loss of the 10-day moving average support is going to be a red flag for short-term bulls on these breakouts. Weekly time frame for TWMJF, and the Canadian ticker here for TWMJF is CGC.TO. So these are dual listed names, and this is the American ticker. And we are breaking out on the weekly, huge volume, and looking at that volume, multiple $1 million a day on average. And same thing where we zoom out, and we can see now, look at the difference here compared to the penny stocks that have already seen these price levels. We are in blue sky breakout for TWMJF. There is no resistance, no previous price history to get through. That is an ideal scenario for a bull. So these Canadian names are seeing a lot of momentum, and TWMJF blue sky breakout bull is looking great. OGRMF, Canadian ticker is OGI.V. Also breakout mode, establishing support on the way up. We've got a bull flag forming. This is a continuation pattern that suggests upside is coming. It comes after a very strong bull break and then normal healthy consolidation, decreasing bear volume, trading in a little parallel channel. And you could draw a bull flag or a bull flag pole, and then you got that little flag. So looking at all these names, right now this one stands out as the best opportunity heading into next week because consolidation is occurring, and it looks like the bulls are going to show up on Monday or Tuesday and head back up towards 237. Keep this one on watch. Look for a spike in volume to indicate consolidation is done. 10-day moving average support will be catching up in the low $2 range. 215 is support, then 212, and resistance is 225 and 233, the highs of the past 2 days. Liking the setup on the daily chart for an opportunity early next week. Breaking out on the weekly, look at this chart since October. Perfect higher lows and higher highs. Bulls are in absolute full control of the longer term trend over that time period, and we're approaching blue sky breakout land, and in fact we actually have it now this week. 216 was the previous all-time high, and now we are seeing the bulls break that level. So another scenario, Canadian name, blue sky breakout. And look at the gains here, 16 cents up to 240, 2,000% move plus to the upside. Very strong. APHQF, Canadian ticker APH.V. Also a very strong uptrend. It has been consolidating on the way up. You never want to break the higher low pattern. So we had this pullback to 2492, and then we pulled back to 252, higher low. Every time you consolidate, you want to see a higher low establishing that strength. We also have some normal healthy consolidation occurring here with decreasing bear volume, holding the 10-day moving average support of 280. A little concerning, the double top at 310. 310 and 312 is where we pulled back. So want to be aware of that resistance level. The upper Bollinger Band is a resistance as well, just over $3. So consolidating, we might see a bearish MACD cross. If we were to lose the middle Bollinger Band support, that's a red flag at 273. Weekly time frame here, also in blue sky breakout mode. Never seen these prices before. Very little resistance, but very clearly the upper Bollinger Band weekly level is resistance. Look at the past few months. We have been unable to close above that level, rejected every time. It's at 304. Update that level next week, and we can assume that because it has been the previous history that we are not going to be able to get above that level, and that's where profit taking occurs. Lastly, we've got GWPH. This is a legitimate play on the NASDAQ, and I'm liking the setup here as well. We've been following GWPH in our chat room community since the $80 range. Big time gains to be had there. I'm a very big long-term bull. There's buyout rumors circling. So the bulls showed up on Thursday with a bullish reversal candlestick after normal healthy consolidation. We broke out, hit blue sky breakout all-time highs. Now we're consolidating normal and healthy. We need the 10-day moving average as support, 126.60. That's a resistance level. The weekly time frame, good-looking bull flag here. Lower wick showing bulls buying the dip this week. You can see that decreasing bear volume, and some of that volume this week was bull volume with that lower wick. There is a lot of options activity on GWPH, and that's what sets it apart as a big boy as well. You can play options where you can't on those other names. So the options activity on GWPH is about 10-to-1 calls versus puts. So that pretty much means 10-to-1 bulls versus bears in the bets that are being placed. And there's a lot of calls being bought for the 150 and 155 strike price for the end of November. So that's essentially people making bets that the price is going to be up in the 150s in a month. And that's a bet on the buyout rumors that are circulating. So keep GWPH on watch as a legitimate investment. And again, can't stress enough that you do not want to be investing in penny stocks without knowing the debt structure. And on the webinar, I'll go a bit more in depth and give some examples on what to look for. But convertible debt, dilution, doesn't matter how good the company is, doesn't matter how hot the sector is, that kind of debt structure can destroy a company. And you don't want to be on the end of that. Here's an example right off the top of my head, GBSN, penny stock. Look at this dilution and reverse splits. The price was up over $1,000 due to the reverse splits. That's where we were. Now we're down at 4 cents. That is 100% dilution. I don't know what the company does. It doesn't matter. The company could be printing gold out of toilet paper. If they have this debt structure that is pouring shares into the market, the stock is not going anywhere. So convertible debt, dilution, essential if you're going to be going long in a stock. And there's also legitimate plays. There's an upcoming IPO in the New York Stock Exchange that's going to be coming in the next 3 to 6 months, and we'll highlight that in the webinar as well. That's going to be an incredible investment opportunity. We're going to start seeing these legitimate names IPOing, and the penny stock boom, in my opinion, the bubble burst back in 2014. We're seeing great gains again. It's very nice to see this action. But we had 8 companies back when I started doing this with these penny stocks, and now we have about 300 plus. So it's getting very diluted in that sector. Now we're going to legitimate plays onto the New York Stock Exchange, and it's going to be a funneling effect with so few opportunities to invest in this sector that the money is going to pour in. Valuations aren't going to mean a whole lot. They're going to get very ballooned out of control. We are going to see another bubble, but there's going to be huge gains to be had in the meantime. That's what I'm interested in. I've been waiting for this for 6 years, and it's finally coming to fruition. So we'll be all over it. I appreciate you watching this video. It's pretty in-depth here in terms of time, running on, but I'm really looking forward to this webinar next week, and happy to answer any questions, look over any charts you guys want to look at, and very excited about this sector. It is, in my opinion, the biggest financial opportunity of our lifetimes, most likely. So, thanks for watching. Stay tuned. See you soon.